Rebecca, thank you so much for joining us. There's a lot to talk about in terms of the landscape in Europe, but this comment that a lot of companies won't go public. Why is that? Why is there no pathway for some companies?
Well, it depends what the company is looking for. But across Europe, you've got many founders and entrepreneurs that are looking to grow and scale their businesses, but want to keep that close control. Public markets are a great outcome, but actually for many people, there's other sources of capital where they can achieve their growth objectives, internationalize with private equity and other sources of private capital, rather than having to go under the scrutiny of the public markets.
What fascinates me at the moment is the amount of work that private equity is doing in technology. We always think about the public markets and all these big headline stocks, Nvidia, and we're talking about Meta, but behind the scenes there's been some consolidation. And last week we were talking about Visma picking London as its IPO, and the fact that there's been this huge consolidation. I was looking at 350 bolt-on acquisitions they had done, but you've been doing something different in the background with the Iberian Peninsula, something similar to create a European champion. Just talk us through that and why software is suddenly attractive.
Well, software for many years has been a bit of a sweet spot for private equity. It's got recurring revenues, and the long-term shift towards cloud computing means there's an underlying structural demand. Those are the kind of characteristics that private equity investors like. And there's often a lot of fragmented companies where you can buy small assets, put them onto a platform, and create synergies. That's really accretive because you can get synergies, but also typically by creating these platforms, you get to exit at a larger multiple. So what you've seen with companies like Visma and with Cegid, which is the platform that Oakley sold into, is a combination of those factors coming to play.
Rebecca, let me ask you about Oakley specifically, because you sit in an interesting place within the private equity chain, often seen as a bridge between founders and some of the big private equity houses like KKR, Silver Lake, CVC. How has business been for you at this intersection where you effectively buy founder-led businesses or buy stakes in them and then eventually sell them on to the big private equity houses?
We've really benefited from the depth of liquidity in those larger private equity firms. We're in the sweet spot sectors that they like to invest in, be that digital platforms, technology, software, and education. And so we're helping create companies that they're interested in buying. But buying from founders is not always straightforward. You've got to build those relationships. It's a much longer term type of sourcing, and it's a skill set that they admit they don't necessarily have.
Especially in Europe. I mean, you hear this over and over again that Europe requires so much local knowledge, and it's why it's so difficult for some of the big US behemoths to actually do well here. But I guess my question was more about the fact that these big PE houses are facing a major liquidity crisis in many cases now because LPs are looking for liquidity. They're having trouble selling on businesses, and I'm just curious if you're seeing the impact of that come through in terms of their appetite to do new deals and the way they're deploying new capital.
Fortunately not, and I think they still recognize the need to carry on with deployment. There's a huge amount of dry powder still in the market, both from the private equity funds, you've got sovereign wealth funds, and you've got the secondary market, which has been one of the most active sources of capital growth in the private market space. So for good quality companies, there's still plenty of buyers out there. But you're right, at the top end of the market, you really need to see the liquidity come, partly through IPOs, but you are seeing some strategic interest come back, as you saw last week with the exit of Informatica to Salesforce. That both gives confidence as well as liquidity to the market that enables them to invest in further private equity funds and create the ongoing cycle of investment and deployment.
Rebecca, fascinating, loving listening to your conversation as well. But when are you going to tell the founders that most of them are going to be toast within a few years of running their own companies? Because you know the numbers as well. But, I mean, the outsized founders out there get all the attention, the Zuckerbergs, the Musks, the Huangs of this world, and they are... My chair just... I'll do this sitting down then, because the chair's gone, so I'm going with it. But I'm so relaxed. One day I'm just so chill. But the fact of the matter is, 95%, it's actually 95.2% of Fortune 500 companies are not run by their founders. I only just found this out, which is absolutely extraordinary. So whether they give up control now, or they give up control when they get big as well, it's going to happen for 95% of them.
But it depends what stage of their business development they're at and what they're looking to do. For some founders, they love starting up businesses. They're serial entrepreneurs. They love the adrenaline rush of creating a product, building a company. They don't want to run a company with hundreds of employees and potentially have to look to an IPO exit. Some of them will do that and will carry on being a founder and a CEO all the way through. When we talk to these management teams, it's partly about understanding what is your ambition? Because if you need to move a founder to a different role, you need to build a team around them early on in the investment. Because what's important to selling to private equity is having a really strong team to sell to.
Yeah, I'm in awe of founders, by the way. They are brilliant. And get to the level where a company such as yours invests in. I'm in total awe. I couldn't do it. I've never done it. So I'm looking at this from the outside. These are brilliant people. But by and large, they're not great at growing the companies beyond a certain point, are they?
I disagree with that. I think you've got a mix of different people with different skill sets. Some are great product people, others are great leaders. And a genuine founder that can scale a business and bring their employees with you is one of the best in the industry. So what we try and do is find those founders that both have great product set but also have the ability to lead the teams and build their businesses internationally and also adapt to changing times. So you've got businesses that start as one business model and adapt. And as you've seen with the advent of AI, that's increasingly important. So a great founder-led team needs to be nimble to recognize the opportunity of something like AI so they can really capitalize on it.
How nimble do they have to be in terms of finding that IPO window? Because I was just recalling there was a company, a big company that we all know that I spoke to a few years back now, and one of the points of the conversation was that the founder was too nervous about volatile markets to list. Since then, the cycle has really turned against that particular industry. There's been many IPO windows that have come and gone. So how quick do some company founders need to be about seizing the moment right now and ensuring they get the most value?
I mean, they have to be very well prepared. That's the issue. You have to take months and months of preparation for a window that may move very quickly. So ultimately, the same preparation for an IPO will help you sell to a strategic or private equity. So good founders will be working with their investors to make sure that they can keep all options open. But you're right, it's a much tougher exit route to rely on IPO given that volatility, and particularly in recent months, that's been particularly acute. That's why often looking for a strategic exit is much more compelling.
You talk about the fact that you are seeing a little bit of an uptick in strategic buying now. What sectors are you seeing that interest in, and what's the outlook for more strategic buying activity in the second half of the year?
Well, technology's been very active recently. I think where you've seen some of the big players look now to put further capital in. You've also seen in other spaces where strategics are looking to build scale. They've been waiting for valuations to settle, looking for a bridge between the buyer and seller gap, but ultimately it's looking for quality, finding teams that have a consistent strategy, where they've got a track record of performance and where you can be sure that actually you can achieve the synergies that they're expecting through the deal.
You've had a long career in the industry, and it's been a career probably marked by lots of institutions, professional money around you, very sophisticated investors. There's been a real dialogue shift in recent times, and some of that led by the US president talking about getting retail investors involved. BlackRock's talking about it as well. Is this a space that is open for some retail investors to come into because they've been cut out of it for so long, or is it ripe with risk, investment risk for them if they don't understand the product and the lack of liquid assets, or illiquid assets, I should say?
There are ways to access it. For example, Oakley has a listed fund called Oakley Capital Investments, OCI. That gives investors the opportunity to buy and trade in and out of shares on a daily basis. So there are ways to access the markets, but you're right, there's been a huge push into unlocking the retail channel, with the bigger funds really thinking about it as a massive growth window. It is one that does need to be addressed cautiously, understanding the appetite and the risk profile of those underlying investors, but it's certainly seen as a great opportunity for the future.
I'm going to be really naughty here. There's a Fortune survey said none of the founders CEOs in this year's Fortune 500 are women. Tell me why, Rebecca.
I think that's a great shame. I think what the industry more broadly needs to do is make sure that they create career paths and opportunities so that women can succeed on an equal level with men. In the private equity industry, we're addressing it with many different firm initiatives. There's an organisation called Level 20, of which I'm chair, which is all about promoting and supporting women as they get to the senior levels in private equity. We've managed to achieve the entry level, some really good statistics, but now it's about making sure at the senior decision making, at the investment committee, more women are present.
Absolutely. We've got 4 daughters. We want them all in private equity.